If you want to become a successful trader, you need to understand that trading is not about predicting the future. It's all about risk management. When I started trading, I used to think that trading was all about having that crystal ball and being able to predict which way market would go. But in reality, successful trading is all about risk management. This is the only thing as traders we have full control of. Risk management. It's all about being able to minimize losses and maximizing our gains in a way that it is sustainable over the long term. Hey there, Tamir from FIBONACCI'S.com with the daily market recap. Please hit the like, subscribe, share with friends, and without any further ado, let's see the charts. Bears are in control since 460, since end of July. Bears to control now, breaking below this trend line. Looks like 423 gap is next. June, September, before beginning of Q4, this gap, in my opinion, will get filled. We have 434, 428, just look left. It was resistance, so by natural things of price action, it will become support. Below it, 423 will get filled. Same on the Qs. Do not fight the trend. The trend, for now, is downwards. 357 to the downside. Below it, 349. And we have 333 gap. And in my opinion, and it's only my opinion, this gap will get filled before the beginning of 2023 Q4. Dow Jones, same thing, going towards 343 gap. Below it, 340, 334, and then another gap at the 332. Remember, more than 80% of all gaps will get filled throughout time, and for now, all across the board, bears are in control. 345 below it, this gap will get filled. IWM gave back all July's gains, gave back. Now 182 is the next support. Below it, we are heading towards 180, and then gap at the 176. Remember, gaps are like magnets for price action. When you see a gap, you need to understand that more than 80% chance this gap will get filled, and it doesn't matter if it's a gap to the upside or a gap to the downside. And if you're a pattern seeker, you can clearly see left shoulder, head, and if 180 will hold and we will get a bounce, we will go towards 186 once again, and then closing this gap. But we don't predict the future. We follow price. We use levels and trend lines as our guide for future price action. As you can see, we have this trend line that helps us to identify support of the higher lows. Now price is at this area. Below this area, this gap, 176, will get filled. Bitcoin broke below this trend line. Massive liquidation overnight. Now 24 will be the next support. Let's take Fibonacci once again. We don't even need Fibonacci. We can take trend lines. 21 might be next. Fibonacci helps us. As you can see, 25K, 23,600, and then towards this trend line at the 22K. Ethereum, same thing. Let's draw once again. We have double top scenario. If we go to the weekly, double top scenario. Next, 1500. Below it, let's see where price of Ethereum might be heading next. 1644. Not surprising. Support over here. Resistance, resistance. Below it, 1514. Below it, 1390. Below it, back to 1K. Crude oil at the 50% retracement. Now, let's see, can crude oil bounce back above the 80.50? And then we have 82 and 85. Follow price, use levels to the upside or to the downside to manage your risk. No other indicator can provide you with high probability where price might be heading next, because all these indicators are lagging. All of them. No other indicator. I don't want to say trust me, but throughout my first 2 years of becoming a full-time trader, I went through, not all, but hundreds and hundreds of indicators, hundreds and hundreds of strategies based on these lagging indicators, and all indicators cannot provide you with high probability where price might be heading next. This is why we use Fibonacci and trend lines. We have this trend line over here, got broken to the downside. Now we are waiting for a bounce back. Short continuation below 79, and we don't need to guess where. We have all the levels to the downside to manage our risk. Apple, as we said, this gap must get filled, and here we are. Got filled. Now looks like Apple is going towards the 170, 169 area. Just look left, we don't need even Fibonacci. Where is the next high probability support? Look left. All this area of the 170 is the next support. Below it, 167. Another gap that by this price action, I would not be surprised if this gap will get filled during August until middle of September. Tesla, another great example of why when we see gap to the downside or to the upside, we need to know that this gap will get filled, and got filled. Now 214 to the downside, below it 197. For now we have this red trend line that helps us to identify that the trend is to the downside. So don't be a hero, don't try to fight the trend, because if you fight with the trend, if you argue with price, you will lose. Nvidia, we have Y trend line that helps us to identify lower highs, which means retracement, downtrend, pullback, doesn't matter how you call it. No long position for now. Let's see. 433 is now holding 3 consecutive days. It was support over here, it was resistance over here. Now below it, no need to guess where price will go. 419, 405, and then 394 gap. Amazon slowly giving back all the earnings gap. 132 is next. Below it, 130 gap, earnings gap will get filled. Microsoft, here we are. If you follow me on Twitter and you saw previous video, you know this trend line, and we said that Microsoft slowly sliding down this trend line towards the 316 gap, and here we are. This gap is closed. This trend line is not relevant anymore. Now where price might be heading next? Below 315, we have 303 to the downside. As you can see, all across the board, we have downtrends. AMD broke below this area. Now 106, 107 from support will become a very tough resistance. Now let's see where price of AMD might be heading next. 1.80 and then 93.52. Google during hours made noise that bulls are in control until they got rejected by the 132. Look left, 132, except this candle 132 is a very tough resistance on Google. Now support 129, 127, below it purple trend line. Google overall moving sideways since end of July. Netflix breaking below, closing the gap at the 409, heading towards this red trend line. This red trend line goes all the way back to March 2023, holding the higher lows. Below this red trend line, we are heading towards this gap at the 383. If you like what you see on my channel, on this video, please hit the like, subscribe, share with friends, will be much appreciated. Thank you very much. If you have any comment, feedback, write it down. Anything will be much appreciated. Meta, continuing to the downside, 283 is next, below it 273 and then 259. As you can see, everything is sliding slowly down. All July's rallies all across the board, basically market is giving it back. Shopify, let's clean the chart. As you can see, Fibonacci trend lines sliding down, and as long as we have these trend lines shows us the way to the downside, we are in a downtrend towards filling the gap at the 48. So I hope you found this video helpful. If you did, please hit the like, subscribe, share with friends, will be much appreciated. Don't forget to check the links in the description below to find your own path to become your own indicator. Until the next video, stay safe.